2019, sold 3,000 residential blocks of land. COVID happened. I was fired in March 2020 from my new gig. Well, at that time, I thought I'm screwed and COVID's about to destroy the world and my business. The next 6 months were some of the best months that we've had in the e-commerce space.
My journey with the crypto space, my perspective when I watched one of your videos, because now it's of interest to me. The way it started for me, I dabbled in COVID, bought a little bit of Bitcoin. Then it was people saying, why'd you do that? That's no good. It's crashing, it's doing this, it's doing that. And then sort of, you get disheartened when you listen to other people. The more you listen to everyone's opinion, the less you do, the less action you take.
And there's two reasons why I think people don't understand Bitcoin. The first is they don't need it. The second reason is those that are in and around markets that don't actually understand bonds. Those who are trading stocks or in the market and don't understand debt don't really understand the problem with the fiat system. And I call it the end of a debt cycle. That's where we're at the moment.
The information provided is for general information and educational purposes only and should not be considered financial advice. You should consult with a qualified financial advisor before making any investment or financial decisions. Hey guys, welcome to another episode of the Scottie G Show. Thank you so much for tuning in. We've been getting so much love, so many comments. I've been loving it, so please keep the interaction coming. We love to hear from you guys. We love to hear that you're enjoying it, what you're loving about it, what you're not loving about it, who you'd love to see me interview. So please keep in contact with us. Keep liking, keep subscribing, keep commenting, keep the interaction going. Today, really excited to have another guest on board today talking about a topic that is really, really interesting, especially for me at the moment, because it is something that I am trying to learn more and more about. I feel like I just at the tip of the iceberg. There is so much I need to learn about it. So today I have Mr. Mark Di Paola.
Thank you. You pronounced my name right as well.
It's the Italian. Welcome to the show.
Well, good to be here. Thanks for having me, mate.
Oh, thank you. Now, you don't know this, but you are probably one of the reasons, or not probably, you are one of the reasons why I started my own podcast.
Okay, tell me more.
True story. So I was watching you on the Unemployable pod and I was really enjoying the content. I was really enjoying how there was specialty individuals talking about their specialized fields or their industries that they know most about. And I was just taking a little bit from each and really learning from it and really engaged, really looking forward to the next episode. And I was thinking to myself, I would love to bring something like that to sort of help people, bring on interesting people, talk about all different topics. Like at the moment, it's really entrepreneurial and trying to get people motivated or at least change their thinking. And that's exactly what you did for me.
Interesting.
You changed my thinking.
Well, it's really interesting because you messaged a couple of times and kind of said, I watched that episode, well done. Listening to what the boys are saying, really enjoying it. But I had no idea you were starting a podcast until you're like, hey, do you want to be on my podcast? I'm like, okay, when did that happen?
What podcast?
What podcast? But yeah, sure.
Yeah.
So well done, man. Like, congratulations. I think it's one of those things where it's so hard to get started. And then when you get started, it's hard at the start to kind of keep going because it's like nobody knows who you are yet, and you've got to learn the process of interviewing and things like that. But I feel like it's where the world's going from a connection and a community point of view. And I don't mean that in that we're going to get all our community connection by watching people on podcasts. I mean that certain podcasts are going to help you find your community. And that was one of the reasons that I started my own solo podcast as well, is to try and meet the people that I want to interview and build friendships. And so I just think it's amazing. Well done.
Thank you. Well, I mean, look, we can all pick up the phone and speak to somebody that we want to talk to. But for me, the podcast is just this environment where I can invite somebody on and we are just super engaged, where we can just discuss a certain topic. We've got the cameras rolling, so then we know that we're going to share that with others. It's different. And like you said, it's building that community. People that want to listen to me or listen to you on your pod, they'll want to listen because they know that the next content coming is interesting and it's beneficial to them. So I'm having fun with it at the moment. I have zero presenting experience, zero interviewing experience. Some people have said, Scottie, just keep doing it. Just keep doing what you're doing. And you know what? I've just jumped in the deep end. I went from not posting, as in I didn't post on social media. If anyone ever saw me on the weekend, they knew what I did because my wife was posting.
Right.
I would never post. I learned how to do a story for the first time. I'm looking at Yash because he had to teach me. I learned how to do a story for the first time only a few weeks ago.
Geez, you really jump right into the deep end.
0 to 100.
I think I flirted with the idea of creating content and building a podcast forever. But you know, there's a lot in that, man. Like there's a lot in that. But also sitting down with the person, it's great that you're actually getting people into this great little studio that you've created, because how often do we sit and speak to another person these days for an hour or an hour and a half without our phones and without any distractions? And so it's nice to even have that conversation.
One of the challenges I'm facing is, because exactly what you just said, to your point, I love having people here. Face to face, we're in the same room, because there's heaps of pods obviously you can do and speak to people, through the laptop. Technology allows us to do that. But there's something I really, really like about the person being here. Now that probably limits my ability to have a certain number of people that I might want to talk to, because they could live in another country or...
You can always do both.
Correct. But right now, I'm enjoying having people here.
Yeah.
Thanks for coming on, man.
Yeah, man. What do you want to talk about today, dude?
Well, first let's start, tell the listeners a little bit about yourself.
Yeah. So from an entrepreneurial point of view, because I guess that's what we've been kind of speaking about, my entrepreneurial career kind of started when I was 18, and I decided to defer from uni after 6 months. I'm like, you know what, this is not for me. I'm going to go out and I'm going to try the School of Business and Hard Knocks. And hard knocks they were for probably about the first 6 years. And then when I was about 24, I got into land, so selling land for Stockland, Australia's largest property developer. And I had a land career of about, I think it was about from 2007 to about 2019. Sold 3,000 individual residential blocks of land.
Wow.
Had a couple of stints in between there where I tried to start my own businesses and they didn't go quite that well. And so I went back into selling land. And then COVID happened and I was fired in March 2020 from my new gig. And fortunately, I'd started in 2019 building an e-commerce business in the sleep and bedding niche. And at that time, I thought, I'm screwed. Like, I don't have my land job and COVID's about to destroy the world and my business. What the hell am I going to do? But as it turned out, the next 6 months were some of the best months that we've had in the e-commerce space, because everyone started buying
online,
home, right? Yep. And we sold into the USA, so we're in that market. And I fluffed around a little bit the year of 2020, like trying to sell houses for smaller builders and things like that. Just to kind of get the money coming through and affording my lifestyle. And then at the end of 2020, I just had enough. And I said, you know what, I'm going to focus full time on this entrepreneurial thing and my e-commerce business. Did that. Still running the business now. So the business still runs. I don't really spend that much time on it. And I would say for the last maybe 2 years, I've been going deep into the investing and trading space. So now in the last year, trading options as well. And so my main focus and the main thing that I spend time on today is basically research and reading and trading the markets.
I was listening to you on your YouTube channel, Money, Markets and Mayhem. Mm-hmm. So please check it out if you haven't already. I find it fascinating. Fascinating because my journey with the crypto space, and we'll talk about your trading journey in a minute, and you can sort of delve into what you actually do. But from my perspective, when I watched one of your videos, because now it's of interest to me, the way it started for me, I dabbled in COVID, bought a little bit of Bitcoin, bought a little bit of ETH, and it just sat there. Then it was people saying, why'd you do that? That's no good. It's crashing. It's doing this. It's doing that. And then sort of you get disheartened when you listen to other people.
You sold.
I didn't.
Okay.
I didn't sell.
All
I didn't
right.
sell.
Your story has a happy ending.
So I almost forgot about it. Like it was to the point, and the reason why I say I was listening to everybody, this is one thing I've learned also as I've gotten a little bit older. The more you listen to everyone's opinion, the less you do, the less action you take. Sometimes you really just got to back yourself, or maybe you only want to talk to a couple of mentors or a couple of people that are influential in your life with making a certain decision, whether it be business or family, whatever. You sort of keep your network really close when it comes to that. Because I find, because now I've become this, Bitcoiner where I want to orange pill everyone I talk to, and because I'm so excited
That's what
about
100x will do to you.
because I'm excited about it. No, for me, it's more learning more about the fiat currency and its issues that I didn't think about before.
It's funny because there's a lot of people on Wall Street, people that have been professionally in the markets and in the game for 20, 30 years, and they are almost less, some of them are less likely to understand it. And there's two reasons why I think people don't understand Bitcoin. The first is they don't need it, and so they don't choose to go down the rabbit hole. So if you've been around Wall Street and you're worth hundreds of millions of dollars, you don't necessarily need Bitcoin. You can keep compounding at 10, 15, 20% a year, and you'll be fine.
Sure.
Right? So there's a lack of need. And then the second reason is those that are in and around markets that don't actually understand bonds. And what I mean by bonds is debt, the government debt and the business debt that allows businesses and governments to run and function. People have to lend money to businesses and governments for them to function. Those who are trading stocks or in the market and don't understand debt don't really understand the problem with the fiat system, as well as those who do understand debt. And they're not really students of history, where a lot of the stuff that we're seeing now, we can go back and we can see it many, many times happen before. It's just Bitcoin is the new technology for this, for this end. I call it the end of a debt cycle, and that's where we're at at the moment.
Well, for me, I sort of just held it, stuck with it. Obviously, I wish I bought more at the time. Now, when you're looking back, obviously, but at the time, I just bought it. I didn't sell it. I just held it. Everyone was telling me why it was great. Everyone was telling me why it was no good. You get all these different opinions. Only really up until maybe 12 months ago, where I really, really spent the time and just, I'm watching YouTube videos and I'm talking to people like you that know a shitload more about this stuff than I do.
You're asking why,
and I'm learning. But for me, the motivation was learning about the issues in the current fiat system. Simple, put simply, money in our bank account is going down in value every day. Everything is going up in price, whereas you can store your wealth in something else that is going up in value.
Yeah.
So where I'm at in my personal journey is I'm obviously trying to stack whatever I can, not trading. But now that I've sort of come to this point, now I'm super interested about trading. Now I sort of want to understand about the buying and the selling aspect. And that's why when I watched your videos, I get super engaged and super interested, hence why you're here today, because I wanted to have you on, because I'd love to learn more about it personally. And I know that there's going to be tons of my viewers out there that are going to be in the same place, but we don't know where to start.
Yeah, right.
We really don't know where to start. So was your journey similar in the sense that you started buying some crypto and then got into trading after stacking?
It's a really good question, and I think it's something that Bitcoiners and macro gurus and stuff, they don't often talk about, right? Because when they get onto a podcast, they're assuming that the people listening, because they're watching a finance or a macro podcast, have that all worked out and have an understanding, and they're more delivering the real-time stuff. But I too am talking to an audience who have never invested and never traded, and I probably need to speak more about the origin story, and I'm trying to do a better job of kind of catching people up to where I am. And so I think that's a really, really good question.
Because I mean, you've done hours and hours and months and months, And for newbies, it's hard.
Yeah, no, you're right. So, so my journey started probably back in 2000, like trading macro investing journey probably started in about 2018, where I started to see like it was maybe the Mag 7 or whatever that started to go up, and I'm like, oh, I should invest 20 grand into each of these names. And I remember one day when Tesla was getting slammed in 2019, about to hit buy on 20 grand worth US of Tesla, and I didn't, and I canceled the order. And that 20 grand would probably be worth like over a mil now, right? That's how early I was. And but I didn't know why I was hitting buy necessarily. I didn't understand it. But I got interested in it because that was in the news, and I started watching like CNBC and all the clips on YouTube and stuff. And what I realized is really quickly that like my human emotions, because I wasn't prepared for this game. I would do the opposite thing than what I'm supposed to do at all the right times, so I'd buy when I should sell, I'd sell when I'd buy, because it's like your first foray into markets, and you're not really mentally equipped to deal with the swings and the price actions.
You get emotional.
Yeah, and the people that you're trading against are actually building algorithms based on how they know retail and the crowd will act in certain situations. So you'll often see things like run up to a certain level, and you're like, oh, it's going. You don't buy, and then it gets to that certain level. Like if anyone's watching at home, ask yourself if you've bought something. If you've seen it go up, it goes down, you don't buy. Then you're seeing it go up, and you're like, no, I'm not going to chase. And then it goes up, and then you buy, and then the minute you buy, it goes down. Well, that's intentional. These algorithms...
Because there were a lot of other people that did exactly the same thing.
These algorithms are built to hit those max pain psychological levels. Like, they're not just technical algorithms. They're built to find max pain, to make people chase, to do all these things. And so my like first couple of years, I just lost money. I was like buying this and selling this and buying it. And I'm like...
But it's also how you learn.
Yeah. I'm like, but I wasn't doing it full time. I was just dabbling. Yeah. And then 2020 happened, and everyone was at home, and I had a lot more time, and I thought, like, everyone was screaming that the world is about to break apart.
Yep.
And within 1 month of the biggest crash that we've ever seen, we were back at all-time highs.
Wow.
I actually sold my super before the crash because I knew just enough to sell my super. And so I sold it before the crash, and I was laughing. And then after a month, I'm like, oh my God, I'm missing the train back up.
Because there were some really good opportunities during COVID.
Yeah. And I'm like, holy shit. It was the most interesting thing to me that I'd ever I was like enthralled, wanting to know what was going to happen next. Why is this happening? Why are the markets moving? Whose liquidity became a big thing. So the governments and the central banks have put a lot of liquidity into the market. And without going into details, because it's a whole podcast on that liquidity supports stock prices going up and to the right. And that was kind of unspoken at the time. Like, some people knew about it, but it was unspoken. When COVID happened, they shut down the whole economy, and then they flooded the markets with liquidity, with money. They basically, every central bank in the world printed money out of thin air. They just created money and put it into the system to shore up the system.
Yep.
And everyone, the veil was just dropped at that point. And everyone's like, holy shit, they are never going to let this thing crash. They can't. They won't. They can't.
As long as they just keep printing.
Every single time this shit happens, they're going to step in, they're going to print money, and it's up and to the right. And I'm like, okay, I have to understand this. And so 2020, I started like going deep into podcasts and reading, and I started subscribing to certain people, because I find the best content is behind a paywall.
Yeah.
And it's not necessarily expensive, it's just behind a paywall because it's curated. Yeah. And the biggest challenge, I think, because you can say go and do that, but I think the biggest challenge is being able to discern who to listen to and who not to listen to in these times. And I think one of my superpowers is being able to work out who to listen to. Yep. Because there's so many so-called experts, newsletter writers, economists that are they just have no idea what's going on at the moment.
And you've sifted through a lot of them. And I watched one of your videos where you talk about like the monthly cost or the yearly cost of some of these, and some of them are not expensive, and then it goes up to some that it's a pretty serious investment if you want to get that content from that particular expert.
Yeah, and the ones that are most expensive, they're providing trade ideas. So they're telling you but
Like, do they almost share their own trades with you, and then you can either follow them to your capacity, of course. Yeah. So you can do that.
Yeah, absolutely. So this GMI Raoul Pal, and I'm sure everyone's heard of Raoul Pal if they're in the space, because he has Real Vision and he has a free podcast. He has a free tier, but his like personal research service, him to like high net worth individuals, is like thousands and thousands of dollars a year, over 25,000 Aussie a year. But he shares his trades. He shares his trades, and and the thing that I find amazing about it is that he has specialists with the business cycle, specialists with AI. And at the moment, in my opinion, the whole game revolves around the changes that are about to happen with AI. Like,
are you talking about AI setting trades, as in doing its own analysis, or are you talking?
Not so much. I think people are underestimating the impact that AI is going to have on the world we're moving into.
Yeah.
And there are too many macro experts that are speaking about macro and interest rates and all these things without considering what's actually going to happen with AI. And so one of the tells for me is those who have a business cycle process and those who are also speaking about how AI is going to impact the world that we're moving into, right? If they're not speaking about AI, then start with people who are speaking about macro and with AI.
So you're talking to the extent of, say, the employment sector and where AI is going to change businesses and where the flow of money is going to change because of AI. Not necessarily AI in the stocks or AI in crypto trading, just in general.
To make it really simple, right? Yes, that. And to make it really simple, I think what a lot of people underappreciate is that technology is deflationary. Like, look at the price of your computers, look at the price of your TV screens, look at the price of software. Everything has come down in price and the quality's gotten better and better.
Yeah.
What I think people are misinterpreting or underestimating is that AI is going to be a massive deflationary force. It's going to bring the cost of labor and everything down. And the majority of people in the macro space at the moment are worrying about inflation. Right? And inflation is a problem, and it's potentially going to be a worse problem in the short term.
Yep.
But long term, AI is going to be a deflationary force.
Quick shout out to one of my favorite market voices right now. Mark from Money, Markets and Mayhem is running a 10K challenge where he's trying to turn 10 grand into 100 grand or something much bigger. Live, in public, with full transparency. He shares every trade, every mistake, and the thinking behind it. So whether you're new to markets or already in deep, there's real insight here. You can follow the journey by subscribing for updates at markdipaola.com.au. That's MarkDipaola. Or catch the podcast on YouTube at Money, Markets and Mayhem. That's at Money, Markets, Mayhem. Check it out. It's raw, real, and you'll learn a ton. That's interesting. So, cost of goods coming down because of AI, whether it be farming in terms of how AI can benefit the farming industry to bring the produce prices down, manufacturing, like every sector really can introduce AI in one form or another. It's not always, everyone always thinks AI is just replacing people on the phone or something like that, but we're talking huge effects worldwide of what AI can do.
Yes.
Is there, I mean, I know that the companies that probably have it aren't sharing it, but is there AI like bots and things like that that are now trading?
So in that space, AI is not new. There's a guy called Jim Simmons, I'm not sure how you pronounce it, and he formed a company called Rentech, and he was actually like I think he was a maths maybe you can look it up, but he was Jim Simon's Rentec. He was like a mathematician or a physicist or something, right? Like he had like a really smart guy who'd never traded, but used his math ability to create algorithms to trade, and it became one of
And
the.
was it just based on history, or was it based on predictions?
I don't exactly know, but it was all automated. So it's funny, right? It's because AI in the trading sense is not new. Like
Right.
the algorithms and some of the best funds in the world are all automated. A lot of the flows that you see in daily markets, when the price whipsaws and things like that, that's market makers using like AI programs to buy and sell depending on flows. Like trading is pretty much all automated.
Do you personally have your own check box, like tick box before you do a trade? Like, do you have your own assessment, or
I'm building it, right? And the reason I'm building it is because I'm running a 10K challenge where I started with 10K and I'm trading options, and I'm trying to the gist of the challenge is let's see if I can 10x this, turn this 10K into 100 grand, or if I'll lose it all, right?
Yep.
And I've got nearly 1,000 people following these trades because every trade is I let everyone know the trades.
So have you got people doing that? Because I've seen your post on. Have they invested the 10K themselves?
No, no. And
so they're just watching yours.
they're just watching it.
And if they want to do similar trades,
they can. Yeah. And I'm intentionally giving my updates after the close of trading because I'm not a financially registered.
Gotcha.
I'm not a guru.
Yep.
You should not be following my trades, right? but some are following them, and what I'm learning is that like a lot of it I'm doing on instinct and on my experience and my learning, but I make mistakes, right? And as I'm starting to make those mistakes in front of an audience, I'm realizing this is going to confuse my audience, but also this is more stressful. Like as you start to trade more regularly, you realize that you need better systems. Right, because I started off my window was 3, 6 to 12 months. That was where I made the most money. I bought Bitcoin at 12K US, and then I sold it at like 30, 40, and then I rolled that into Ethereum at 1,000, sold that at 3,000. Then I did it with Luna, then lost it all. We can talk about that if you want. But my window is being able to kind of see the macro and trade on a 3 to 12 month time frame. Now I've started doing it more actively. Like just today, one of my trades was Intel options, and it was up 180% in a day, the options. So I had $15,000 US position that's now 50,000 in a period of 2 weeks, right? And so as I'm starting to do it more more aggressively and more short term, I'm realizing that I need to build better processes and better systems.
There's a lot to it, isn't there?
Yeah, there's heaps to it. And a lot of it is building systems to fade your feelings.
Yes.
Right?
Yes.
The technical know-how, you can learn charts, you can learn all that stuff, but it's often you have to do the opposite to what you're feeling. Yes. And the most effective systems around fading your feelings.
And I suppose part of that is, this is my sell point, irrespective of what I think is going to happen. This is my sell point, and this is my buy point, irrespective of what I think. And it's just coming up with very boring systems that don't use your human emotion.
Yes.
Is that what you mean by that?
Yes and no. Like if you're scalp trading or short-term trading, like a month or a week, then yes, that's exactly what you need to be building. I'm still short-term trading in a sense, but I'm still taking larger time frames, right? So that Intel options bet, those options expire June next year. And so for me, the focus at the moment is, okay, it's gone up 300% in 2 weeks. The inclination is I don't want to lose that money, and it will correct, and I don't want to lose. So it's like my biggest challenge at the moment is selling too early, rather than just letting my thesis play out and letting it ride.
Trusting in it, trust the process.
Yeah, well, you had a thesis. The thesis is playing out. Ride your winners, right? And so I'm trying to build more of a process around, okay, well, I'm gonna let it ride up until a certain point, and then I'm gonna see what's happening. Then I'm gonna roll the options into continue the bet, or I'm gonna take profit if I think the thesis is played out. So I'm trying to avoid the short-term stuff because you've got to be glued to the chair. And I'm trading US markets in the last couple of hours of the trading day. The swings, and it's too much, right? So I'm trying to stay away from the swings. But yes, if you're short-term trading, you got to have your entries defined and you got to have your exits defined. One of the things I'm focusing on, I'm trying to build an AI software to identify entry points. And the reason I'm doing that is because at the moment, someone who loves macro, tech, AI, Bitcoin, all these things converging, there's so many things to trade. There's chips, AI, like this AI chips, there's computer chips, there's energy, because the AI build out's going to need energy. There's crypto companies, there's Bitcoin treasury companies. There's so many things to trade. And so one of the challenges for me is to work out, okay, you've got 10 or 20 great companies in each of those things that you're interested in, but which one should I be buying now? And so I'm using AI to try and build a software that I can plug in. Okay, energy I think is going to run for the next 3 to 6 months. Okay, which of these 10 energy companies should I be buying? What are their buy zones? Which one's fundamentally good? Which one's technically good? Which has the most upside? And then letting the AI decide or guide, and then me pulling the trigger. And because otherwise it takes too much time to go through all 10, analyze the charts, work out which one's better. Am I doing it by feel or am I doing it by math? I'm not mathematically inclined, so I'm going to rent out that math acumen to the AI.
Man, as you're talking, I'm dying, and I'm thinking to myself, maybe I'm way too fucking emotional to do this. Because like you said, taking the emotion side out has got to be the hardest human part of trading, right?
So yes, but humans by nature, that's the human condition, we're emotional. And so some of the smartest guys that I follow from a macro point of view don't short-term trade. They pick the turn or they pick their moment and they hold for a year, 2 years, whatever, right? And so I don't want to scare you away from like the stuff that I'm getting deep into, because you just buying Bitcoin in 2020 and holding, that's been an amazing trade.
Yes, a fluke, but yes.
Right? Yeah, but
if
you can, now that you're learning, if you can find more of those opportunities, take your fiat capital from your productive activities and put it into more of those trades, whether it be the Tesla story or whether it be some small company that produces a part for a chip or whatever, and you can sit and you can forget. See, I
which
know
to
you.
me is less stressful.
Well, I know you, right? I know you from friends and family, and I know that you're a chill kind of guy, and you're not highly strung like I think I am, and so you would feel comfortable doing that. Whereas me, I don't like waiting, right? Like, yeah, my Bitcoin is up. I bought it at 20K, now it's 120K. That's awesome, and it was a significant amount, but that's not good enough for me, right? My ADHD brain wants more. I want to outperform Bitcoin. And so like it was described by Adam on the Unemployable podcast, like when I was explaining to him how I trade and what I do, he's like, oh my God, it sounds like putting my dick in a cheese grater. But for me, I love it. Like that's what my
and that's
ADHD,
a different personality.
that's what my ADHD brain becomes hyper focused on.
Yep.
Right? Like I love, the dopamine hits or whatever you want to call it. Yep. And so, you got the most important, you raise another, you will get to another good point, right? The most important part to this game is working out, who am I?
Yes. You learn a lot about yourself when you're doing this.
I've gone on podcasters saying that you will get more self-improvement and more emotional growth and maturity playing this game than you will being a husband or a father. And the reason is because your wife or your husband or your kids, they love you so much, they let you off the hook often. The markets never let you off the hook. It's black or white. You made money or you didn't. You're not ever let off the hook. Yep. And so the feedback is instant and it's always.
And I think that's where the knowledge is so powerful, because once you start to learn more, and again, I am only tip of the iceberg learning about this, but what I have noticed, say, as I'm learning more about Bitcoin has been probably where I've put most of my emphasis.
Great place to start.
If the market fell out of the arse tomorrow, I'd still be cruisy. Like, I think a lot of people that don't understand it would freak out. Shit, do I sell? Do I cut my losses now? Is it going to keep going? Like, the market could drop, the value of Bitcoin tomorrow could drop, and I would be pretty cruisy about that. Whereas in the past, I would have never been like that. It's just as I've learned that you just need to wait.
But that's not necessarily true, right? You bought it in what, 2020?
A small amount, and then I've been gradually...
And it crashed in 2022?
Yes.
And you didn't sell?
I didn't.
Right? And maybe part of, you correct me if I'm wrong, but maybe part of the reason that you didn't sell is because you'd already had some gains.
Yep.
Is that part of the reason?
Yeah, and I stopped paying attention to it as well. I think I sort of almost blocked it out and just said, just leave it, don't sell it, don't do anything with it, just leave it, and focused on running my business and had other interests. I think it was partially that as well.
So remember the story I told before, right? It's gone down, 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 down. Like, I had a friend and she doesn't know anything about trading. She's a psychologist, doesn't know anything about trading. And when Bitcoin was 15 grand, it's low. That was the low in 2022. She's like, it looks like a nice time to buy Bitcoin. I'm like, whoa. Like, she knows nothing about trading, but she's made that
Yep.
because she saw how people were reacting. But she didn't buy it because it's not her thing. And I wish she did, but she didn't. Or maybe she did, I don't know. But most people, they won't buy it then, or they won't even identify it then. They'll be like, oh, it's dead. Yep. And then, like I said, remember my story before? Up, 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 up. And then at the point where they jump in, boom. Right? And because most people, that's how they're programmed.
Well, we're seeing a run now.
It's like
with Bitcoin, we're seeing a...
It's crazy, right? It's crazy because it's like, you go into a supermarket, you want the prices to be lower, right? You go into a department store, you want the prices to be lower. But with financial markets, most people act when the price is going up, not when they're lower. And so there is maybe a sociopathic or a type of psychology around it as well. But yeah.
You mentioned, you touched on Luna before. Talk about a couple of crazy trades that you've done. Positive, negative. Just talk about a couple of crazy moves that you've done.
Yeah, and just before we get onto that as well, like, I want to put a bow on that conversation prior. The more you learn about yourself, and the more that you dabble around in short-term trades and realize, hey, this is not for me, the better you can become as an investor, like yourself,
for longer term.
Because you can say to yourself, okay, I'm not cut out for this short-term stuff, but this is where the world is going, right? Like, we started Unemployable as an entrepreneurial show. Now we talk more about crypto and then starting a business, because we're moving, again, AI, we're moving into a period where it's going to be so hard to start businesses because most of them are going to get disrupted. Doesn't mean you shouldn't start one, but it just means you got to be thinking a little bit more carefully about it. Sure. So I genuinely believe that the answer, and that's why I started my channel, Money Markets and Mayhem, is the answer is exactly what you're doing. To get educated about Bitcoin, why is the fiat system screwed, and to be continuing to do their job or whatever it is that they do productively for money to survive, and just keep on stacking and putting money into like gold or Bitcoin or whatever they decide it is. Sure. And so I think that is the way, right? And so I do think that even if like the short-term stuff is not for you or someone listening, that what you're doing is the way, and so many more people need to start thinking about themselves as investors and capital allocators, because our fiat system is getting debased.
I've just done it with my self-managed super. I've done it as well. I've put a portion into Bitcoin. Yep. I looked at what my first, before I went self-managed, I looked at what my super fund was bringing per year, and said, surely I can do more with this. This is just sitting there and it's in the hands of somebody else. I want more control here.
Yeah.
So I've gone and I've taken a big portion of my superannuation, put it into Bitcoin. Yeah. And I think I'm going to get a better return long term. I'm not going to touch it for a long time anyway.
Yeah.
So
you will, because 40% of that super is probably invested in bonds. Yep. Bonds are like $300 trillion in the global economy of 1,000 trillion. And they're, since 1980 to now, have the thing that's been going up the most. So they are actually the biggest bubble, and they're the things that need to be debased on a real basis versus things like gold and Bitcoin stocks, etc. And so most of the people out there with a super you really need to be paying attention with this, not financial advice, but pay attention and do your own research because that's what they're coming for, your superannuation. That's what it'll be debased. And it might still go up 5-6% a year. And you're like, okay, it's going up, but your cost of living is going up 8%, right? So you're losing.
You're going backwards.
Yeah.
Yep,
So it's
agree.
important to know.
Crazy trades.
Crazy trades. So the one I was telling you about before, 2020.
Give me the good and the bad.
I took 100K, put it into Bitcoin, and then that 100K turned into 300 or 400 or whatever, and then I put that into maybe 200. Put that into Ethereum at $1,000, and Ethereum turned into 3,000. That turned into like 400 or 500, and then I put that into Luna at $34, and that went to 110. That turned into like 1.4 million.
Wow.
Right? Yeah, and at that point I'm like, oh, Luna's getting a bit frothy. It's a bit hot here. So I took like 60% of my Luna and I put it into Astroport, which was on the Luna ecosystem.
And is this something that you were thinking it's going to be on the rise now? So
and Astroport went from like $1 to $3. So I was doing amazing. And then the Luna fiasco happened and it went to 0 in 2 days. And because my money was on the Luna exchange, even though it wasn't in Luna, everything on that platform got wiped out. And so I pretty much was able to scrape out some of the money I started with because it was in Astroport, and I was able to like flick it off somewhere else and get it out. But I basically saw 1.4 million go to 100 grand in 2 days.
I mean, you don't have to get too personal here, but how did you just keep your shit together? How did you keep your shit together?
I mean, like luckily or unluckily, it was my super. So I'd taken my super.
Yep.
For that reason, and like it was funny because I used to say, oh, this is it. Luna's either going to $1 million or it's going to 0. I was right.
It's not the way you wanted.
I was right. So I don't know. There was a little bit of distance there, but emotionally, it took a big toll. Because and to be a successful trader, I don't think you'll meet a successful trader or investor that doesn't have this kind of story.
Yep.
And most of them become successful because they've had this kind of story and they've been humbled by the markets. Mm-hmm. And so it was very humbling. I pretty much cashed in whatever I had in other assets, and I took a 2-year break or a 1.5 break from trading, which was the bear market anyway. Like Bitcoin, I sold my Bitcoin if I had some Bitcoin at like 45 and all my other things just to get some money back out. So basically did 2 years of work for nothing. And then my first trade back was buying Bitcoin at 20K in 2023, March 2023. So I took a long time off and regrouped and collected myself and waited.
Is this when you moved? Like you moved state? Because you were originally Victoria? Is that?
Yeah, I was in Broadbeach during the craze of 2021, trading from Broadbeach. So we packed up our car, left everything in the storage cage, just went to Broadbeach, and I had my ecom business and I had the trading. It was like just full time, yeah.
So what is it? Oh, well, have you got any other crazy trades before we?
I mean, I've Tesla. Like I bought Tesla at $145, and then it went to $440 after the election, and sold that. So I think I made like 5 or 6x my money on that trade, and that was a decent trade as well.
Are you still dabbling in both? So cryptocurrencies and the general share market?
So I've got my Bitcoin hodl stack, that was the problem, right? I took my Bitcoin, put it into Ethereum, put it in, and so I've got my Bitcoin hodl stack, which I'll never touch.
Yep.
And yeah, it's about 20% of my portfolio. I never touch it. And at some point during this cycle, I'll try and put a bit more into Bitcoin and just leave it, never touch it.
Just keep stacking.
And then the rest of my portfolio, I'm trading. I'm trading like.
And is it more in crypto, like percentage wise?
At the moment, I think I checked it out. I think at the moment I'm like 45% in stocks, 25% crypto, and 20% options, which is 20% options is pretty aggressive.
And when you say options?
So options is obviously buying on leverage, controlling. So one options contract controls 100 shares. Yep. And so for example, Tesla. I can control 100 shares of Tesla, and the premium for the options contract is $17. It varies depending on where you're buying, which expiries, etc. But that premium is $1,700.
Yep.
and I'm controlling 100 shares.
Yep.
100 shares of Tesla, 100 times 400 is, I don't know, what is it, whatever it is.
But if something happens in that
40
contract,
grand, right?
if something happens in that contract,
It could go to zero.
Yep.
So if I don't get the direction right, that's a call contract that I'm doing. And if I don't get the direction right in that trade, it could go to zero, or it could go up, right? And
you mentioned, I think it was 20 or 30% in crypto. Is that strategic because of the volatility of crypto?
Well, the majority of it is just Bitcoin. So I don't know, about 75% is Bitcoin.
Yep.
And then the others are a bunch of, layer one tokens, and Doge is my second biggest crypto position.
Yeah, I've been hearing a little bit about
And
Doge.
I think their ETF is about to launch. But if you go back and you look at the charts of Doge versus Bitcoin since Doge launched, Doge has outperformed Bitcoin. So if I wasn't emotional, or if I had no fear, I should put it all in. I put 75% into Doge, but I won't. But the math is that Doge outperforms Bitcoin. Much more volatile, but it outperforms Bitcoin.
Do you suggest people play around with sample trading first? Like just start playing around with like not real money?
No,
just
no. And yeah, okay, sorry. Yes, just to understand like how to press the buy button, how to press the sell button.
But you mean no, because there's no buy-in.
But
there's no physical.
No, because there's no skin in the game,
Yeah.
and it's different. And so there's a.
So it's not going to be a real trade for learning anyway.
It's a false sense of whatever.
Oh look, I did a trade and made 100 grand.
Yeah.
Yeah, but you only did that because you didn't have to put any money.
There's no safety net, right? What I would suggest is, you can sign up to see the challenge, the 10K challenge, and kind of see why I'm making trades. But what I would suggest is take a small amount of money that you're prepared to lose. Maybe it's 5 grand, maybe it's $1,000, maybe it's 10 grand. And don't worry about the dollar amounts. Don't worry if you're buying 5 shares of Tesla or if you're buying 2 shares of Microsoft. Ignore the dollar amounts, ignore the portfolio amount, and start watching the percentage trade change in your trades.
Yep.
If the S&P goes up on average 10 to 15% a year, and a really good return in the professional space is 20 to 30% a year, right? Start doing that and have a look at your percentage. But the problem with that is, and this is why I think there's such a separation between the old wall and us new young people, is that 20% a year or 30% a year is not going to change our lives. It's not going to allow us to quit our jobs.
Yep.
And so we need those big returns. We need those 100% returns. We need those 300% returns. We need those 170% in the day returns like I had on my Intel options, right? And so it depends what you're trying to do. And so if you're out there and you've got a business or you've got a shit ton of cash that you want to diversify out of the bank or out of property, then I would, get good at managing P&L and try and, do what you're doing. But if you're young and you've only got like 50, 20 grand to your name, I would say you want to start embracing the volatility of things a little bit more and investing small and then seeing how you respond to certain movements. So say you go and do your research and you identify Bitcoin and whatever, and you put $1,000 in just to kind of see, and it goes up to 2,000. It's okay, what do you do now? And then, or if it goes down to $500, what do you do now? And start monitoring your behavior and work out what kind of investor do you want to be.
Yep.
And that'll leave clues, right? You have to just give it a try. It's like, there's definitely no one size fits all advice.
Yep. Does one platform do both? Like, do you use one platform that can do shares and crypto, or do you keep everything separate?
No, things are separate. So crypto is on separate platform to my options trading, which is on a separate platform to some other accounts. So I have a bunch of different accounts.
So what does a regular day for you look like? Are you up and first thing you do is you're checking the markets? Are you looking at 3 different screens, different graphs? So that's what I'm picturing.
So I have a 42-inch screen. I've got my laptop and then a 42-inch screen that gets split into 4 screens.
Yep.
And so I have all my different charts and my trading platforms and everything up. I get up, I don't know, anywhere between, and I never used to be an early riser, but now I can't wait for the market to open. So I get up anywhere between 3:30 and 4:30 a.m. Wow. And I'll trade if there's a trade to be made. But what I'm getting it's like they're premeditated. So now if something reaches my buy level or is in the zone where I want to touch it, I might add a little bit to it or sell a bit or whatever. And so that the market at the moment closes at 6 a.m., the US market. And then at 6 a.m., I would probably go for a walk. I come back, have breakfast with the family, and then I go back out to my computer and I start working out, okay, what happened? What happened today? Why did it happen? What
So
happened?
are you constantly analyzing worldwide economic conditions?
Yes, definitely.
So what's Trump doing today?
Yep.
What's happening in the wars?
Yep.
Like, are you constantly
Yep.
looking at things that are going to affect?
100%. Yeah, my most important framework is the macro framework. Like at the moment, where I believe, and we're another podcast on its own, but I believe we're going through the biggest financial shift since 1971, when America went off the gold standard and into the fiat system. We're going through that at the moment. So I'm looking at the amount of gold that China's buying, the amount of oil that they're settling in gold instead of USD. I'm looking at all these big shifts to make sure that my longer term thesis is still in play, right? And if that changes, or if liquidity, so central banks are going to start taking support away from the markets, then I want to be getting less over my skis, right? And so, I have a framework that liquidity is going to pick up and it's going to maybe peak March next year. So by that time, I want to be taking risk down.
I love what
right.
you're doing.
So the macro is most important for me.
I love it. I mean, you're delving deep. You delve deep.
I've chosen options because I think that's the best way to express a bet and get the best returns and also best risk adjusted, so protecting your downside capital as well.
Because it's not just looking at graphs, right? There's like what's happening in the world is influential so much to the money markets.
Yeah.
All markets. Fiat, crypto, trades, stocks, everything.
Everything. It's like, people say follow the money.
Yep.
Everything always comes back to the money, to the dollar specifically, right? Like even Charlie Kirk, right? Rest in peace, was, let's not go into the story, but he was asked by Tucker Carlson on an interview once. He said, I can't remember the exact wording, but it was something like, what is the biggest problem or the biggest thing, the biggest issue we face? And his answer was the disenfranchised younger generation, the fact that economically it's so much harder for them to get ahead than it was for their parents.
Yep.
And Tucker Carlson's like, what? Like economic? He's like, yeah. And this guy's a political figure, right? And he said, yeah, because always markets first. And he basically said that that's the biggest problem, that, the money, the debasing of currency, the debt burden, all those things, like it all starts there. Everything that you see happening in the world, whether it's the marches in UK or the immigration or all these issues, always come back to money.
And it's a volatile time at the moment. Like, I don't remember it ever being like this. Like, we are in a really interesting point in history.
It wasn't. Go back and, like, now politics and social media, they're intertwined, right? Yes. Go back and watch The Social Network, the Facebook movie. Politics, I think it was 2010, 2013, politics isn't mentioned once.
Yep.
Right? Why is that? Again, this is what you see at the end of a 100-year debt cycle. This is the last turning. This is the crisis phase. Yep. And so that's how big my macro framework is. I'm looking at like 100-year cycles, and we're in that crisis mode. And in that crisis phase, everything that we're seeing on social media, everything we're seeing on the news is the topic of the day. In 20 years, when our kids are a little bit older, I don't think it'll be like that. It'll be the high. And so the focus for society will probably be different.
Do you still have interests in property side of things? Because I know you've got, obviously, so much experience with, land that you were selling. You've sold so many properties. You've done your own investing. Do you have that itch as well to continue?
Other than buying beautiful properties around the world that I can go on vacation at, or no.
So as an investment, it's not part of your portfolio anymore. You're not really interested. Like whatever you've kept, and
like don't get me wrong. Like 50% of my wealth is still in my properties
because we've seen increases.
Because I own a property in Melbourne, I own a property in far north New South Wales, right? So I still got a lot of wealth tied up in property, but as for going out and developing properties and things like that, it's like, man, with everything that's happening at the moment, I don't even know if I'm going to be in Australia in 5 years. So I don't know. It's just, and honestly, I don't think I can get the returns in property that I can get doing this.
Man, people that are listening to me on this know that I was a property guy, like just property. That's all I cared about. Ran my business. My business helped fund property. Like I was just love it, you know.
And you love it.
And I still have interest in it, and I still develop, but I'm looking at the world differently now. And I'm looking at money differently now, and I'm looking at diversification differently now. So yeah, a lot of things have changed for me as well.
Like how are your land tax bills, right? Like all property can be, I mean, everything can be taxed, but property is getting taxed and will continue to get taxed more highly. And the only way really to make money on property these days, I believe, is to leverage and develop.
Look, my strategy has been to develop and hold, which is good and bad, because obviously it ties me up financially to then move on to the next project. But I've always wanted to hold and increase that capital value over time. But with that comes tenant issues, maintenance issues, land taxes, all the issues that come with property. In hindsight, of course, and hindsight's a beautiful thing, if I had to put all that money into Bitcoin, it'd be a totally different story. But it's not that easy.
It's funny, right? Like, again, stage of life, what's your circle of competence? You know, I know a lot of people that probably watching this show knowing that you're a property guys. And if you don't understand markets, you're not just going to take all the money out of property. And like the thing about property is if you can leverage 5-to-1 or whatever it is, you can make really good money cash on cash. Yep. And so I'm not saying that it's not good. But if you're someone out there that's thinking about buying an investment property or their second investment property, you may not. Property will keep going up. In Australia, property has to keep going up because it's a major pillar to the Australian economy. Yep. Just like stocks in the US, they can't let stocks go down because they'll have even worse debt crisis. Same here. That's why the immigration keeps coming in, even though people are against it. And so property will go up. And so if you buy the property, it will go up. But the question is, have a look at property on a chart versus gold or Bitcoin in 10 years. Yep. And you'll see that your property didn't go up as much as gold or Bitcoin. Yep. And
all the costs associated with property versus buying and holding.
Right. And so again, horses for courses, but if you're starting out, the thing I keep saying, probably one of the most controversial things I say is, and I get heaps of flack for it because I sold 3,000 blocks of land, used to be in property, right? But I say publicly, like, I want to, for my kids and life advice that I'd give, not financial advice.
Save up for a Bitcoin?
If you've got $0, instead of saving for a deposit on a house until you get to 100,000, and by the time you get to 100,000, the house price has doubled. Yep. Take your weekly paycheck or your monthly paycheck, put it into Bitcoin. Yep. There's so many stories of people put $30 a week into Bitcoin and now it's up like 1,000%, right?
You beat me to it. It was my next point to talk to you about because I heard you say
save in Bitcoin, right?
I think your advice was your advice to your children, and I said this to my kids after. Actually, I think I showed Geordie. I said, Geordie, look at what Mark's saying, and he's listening to it because I was always taught you save up for a house. You must buy a house. Like it was what we did, right? So I was saving for a house, and now I'm sitting down with my kids, the property guy. I'm sitting down with my kids. I'm saying, yeah, look at this. Instead of saving up for a house, you got to save up for a Bitcoin. Look, Mark's telling you so.
100%, right? Like save in Bitcoin.
But it makes sense when you stop and think about it. It makes complete sense.
Because it'll give, like later, you'll be able to buy the house outright.
Buy the house.
And you can still go back to property. You can still do that. But I think you're going to do much because your cash in the bank, if you're saving and you're putting the cash in the bank and we're getting debased at 8% a year, you're losing 8% a year on the money that you've saved, right? Simple math. So that time that it takes. Now, if you've got a parent that's willing to give you the house deposit, and so it's no money down, you can leverage the other 80% from the bank, go buy a property.
Sure.
Don't lose their money on Bitcoin buying at the top of the cycle, right?
Yep.
But if you got no one there giving you that money, save in Bitcoin, don't save in a bank account.
We had a management meeting the other day, and last year we had put some business funds into one of the big bank term deposits. And we pulled the money out, I think a year later. And I was going into the meeting and I'm on this Bitcoin thing at the moment and I'm trying to convince everyone around me or teach people around me. I've become all of a sudden this expert. And I typed into ChatGPT, if I had have put, let's just use the number, $50,000 into a Big Four bank account, what would my interest return be at 12 months versus putting into Bitcoin. And I've gone into the meeting. This is what we should be doing from now on. They're looking at me and says, Scott, what have you become? What's happened to you?
Man, it's like I wish I had the math ready, and I don't want to like ruin the continuity of the show and stuff. But if you're at home, grab a calculator grab ChatGPT and say, ChatGPT, if I was just to put $100 into Bitcoin for the next 10 years, and Bitcoin keeps going up at 35 to 40% a year, because it has to continue to go up, right?
Yep.
How much money will I have put in after 10 years, and how much will my Bitcoin be worth if we assume an annual increase of 35 to 40%? And you'll be blown away.
It just keeps compounding.
And that's my biggest issue today, is that so many people are focusing on the negatives. They're focusing, and I get it. I get the immigration debate, and I get all these terrible things that are happening in this state of deterioration that we're in this fourth turning. I get it. But you could focus on that.
Yep.
Or for a minute, you could focus on understanding Bitcoin and the power of compound interest.
Yep.
And you could create your own ticket.
Well, look, it's one of the main reasons why I started this show. I want to motivate people to get out of their comfort zone, or to maybe take that leap of faith of something they've been thinking about. Man, I could talk to you for hours. I could talk to you for absolute hours. I love it. I'm going to finish up with a really tricky question. If you could have dinner with anybody, who would it be? I'm putting you on the spot here.
Yeah, it's funny because that's not a tricky question for me, because I've always got an idea of who the top 5 people I'd want to have dinner with.
Yep.
And it's always evolving. And so
today, who is it?
I used to go on.
Apart from me, of course.
They used to be one of my first date questions to the other person.
Oh, really?
To kind of see what kind of thinker they were. At the moment, it would probably be, even though I don't think I'd get along with him, probably someone like, it'd be Elon Musk, Peter Thiel. There's a gentleman by the name of Stanley Druckenmiller, who's one of like the greatest traders.
Okay. Yep.
That's ever kind of lived.
Start the dinner early, so you got in for like hours.
Yeah, so Musk, Peter Thiel, Stanley Druckenmiller.
Elon would have to be an interesting cat to talk to.
I kind of feel like if you're not on Elon's level, he'd be very difficult to talk to. Like, I don't think he'd want to talk to you. I don't know who the 2 others are, but yeah, there's 3.
I love it. All right, so where can people find you? So obviously there's Money, Markets, and Mayhem on YouTube.
Yeah, so on YouTube, the podcast that we release every second week, and we actually just released a pod with Jesse Myers, and he is an OG Bitcoiner, and he goes through, it's a 1.5 hour podcast where he goes through the history of Bitcoin, why Bitcoin, fiat currency, all the assets in existence, and why he thinks, Bitcoin is the thing of the future, that millennials are going to tell their kids that was the thing that they should have invested in. So yeah, check out Money, Markets, Mayhem. So you just type Money, Markets, Mayhem on YouTube, and it'll come up, and you can watch that pod. And if you're interested in the trading challenge or seeing the moves, see whether I can.
So jump on your website,
10x.
Put your email address in, and then you'll just send updates on your trades.
That's my name. So Mark DiPaola, DIPAOLA.com.au, and you can subscribe to that.
Thank you so much for coming on, man. I'm really loving this pod idea, because I get to talk to people like you, insightful people that know so much about your area, and you've put so much effort into this, and you're inspiring. I'm going to take so much out of this and keep learning and keep doing what I can do to my own capacity, whatever's comfortable for me, and everyone out there should do the same. And like you say, we're not financial advisors, but we're just sharing stories. We're sharing stories about what we're doing, and everyone's on their own journey. And
people can relate. People can relate to stories.
Absolutely.
And keep telling your boys to stack sats.
Thank you. I'm going to get them to watch this. So thanks again, guys. Thanks for tuning in. I'm glad you were able to see Mark here with all his knowledge, and hope you've been able to take something out of this. So please don't forget, like, share, subscribe, all the usual stuff that everyone says after every single pod or post, but it's so important, because the more people that like, the more people that engage, the more people that share, the more people that comment, the more activity that is out there, then the more traction we get. We can get more followers, we can keep getting unreal guests talking about unreal stuff, and we're just loving this over here. So thank you for tuning in, and we will see you on the next episode of the Scottie G Show.